I think last week's stock market sell-off is over, and I think the bottom is in. As the fact that Jerome Powell said that the Fed might cut interest rates slower, the fact that now that's starting to get priced into the markets, it's no longer a surprise, and investors will eventually come to grips with that. I think that's sort of behind us now, and that the resumption of the Trump trade is back due to the tax cuts and deregulation. Yes, it could be inflationary because of the tariffs, but I think the Trump trade is back, and I think this market has more room to go. Uh, the biggest uncertainty with the market right now is what Treasury Secretary Donald Trump would pick. So I think that could be a little bit of a cloud for the market until that happens. But I think the sell from last week's over. He could pick either Howard Lutnick, the Cantor Fitzgerald CEO, and who's very pro Bitcoin, who has hundreds of $1 millions of Bitcoin, or more of an establishment favored Treasury Secretary of Scott Bessent. So right now, Scott Bessent is favored a little higher than Howard Lutnick. There's also Mark Rowan, who is the CEO of Apollo. And there's also Kevin Warsh, who looks like he's in third place according to the betting markets. He used to be the youngest Federal Reserve Board governor. And I think until the market really knows who the next Treasury Secretary is going to be, the market might trade a little bit sideways, but I think the bottom is in. Another good news, we had Tesla up over 8% today due to the Trump administration perhaps easing and relaxing full self-driving autonomy and robo-taxi rules. This isn't a surprise with Elon Musk's $130 million donation to the Trump administration, his involvement with Trump, hanging around Mar-a-Lago a lot during the transition. He's going to have a big say, at least as of now. The risk, though, is what if the Elon Musk-Trump bromance ends? That's a risk in terms of the regulatory benefits that Tesla would get. But I don't think that's going to happen per se right now. But look, the other risk, though, is even if the regulatory environment's better, technology would have to prove itself before the regulatory benefits. I think the technology of autonomy and robotaxi proving itself first is more important than a friendlier regulatory environment. So that is an overhang, I think, on Tesla stock, is that Tesla has to prove itself a little bit more on the safety of its autonomy first. But either way, it's good news in the long run. Yeah, friendlier regulatory environment should bode well for Tesla. That's partly why Tesla's up 8% today. But I'd issue some caution because Tesla does have to prove its technology first. And then on the other hand, the other big news for this week is NVIDIA earnings on Wednesday. There's going to be a lot of hype around that because of all NVIDIA's the pick and shovels play for AI and its GPU AI chips powering this fourth industrial revolution. However, there was a negative report that came out that its Blackwell servers are overheating a little bit. So that caused the stock to be down about 1.5%. But I think that's healthy ahead of NVIDIA's earnings, especially if NVIDIA blows it out of the park. We're seeing so much demand for NVIDIA's chips. It's a gold rush. NVIDIA's earnings are finally growing into its price. Although the price appreciated a lot, I think it's still fairly valued. It might not be undervalued anymore, but I think it's fairly valued. But either way, this NVIDIA earnings report on Wednesday will be a key barometer over where at least the tech market's going to go. But I still think we're in the early stages still of this tech and AI revolution, and the market should do well by the end of the year, in my opinion.